Okay, you know I love key levels. Are you getting it? I love key levels a lot because these levels helps me, in determining how this trade is gonna go. So this is the 1 hour chart. Let me go to like 2 hours or 3 hours chart. So let me show you something. Okay, please open so that this video can be fast. Okay, as you can see, we were acting on this support. We came the first time here, we couldn't break, we held. That was what brought us to 2048 area. Then on getting to that 2048 area, let me go back to the 1 hour time frame. Then we came down again, we couldn't break it. That's a double top. Now the difference between the bear market and the bullish market, a new bullish market, is these two places. So normally we are supposed to remember this, my formula, this my strategy is either we'll break down, retest and continue going down, or we'll break up. This particular has helped me a lot and continue going up. This has helped me a lot. This is a no trade zone. I call this a no trade zone because it can turn to a consolidation. So if you are selling, you should be selling from 2020 to probably 2010 2003 $2,000 area. Are you getting? So let me just say selling from 2020 to 2006, not bad. If you, in case it turns to a consolidation phase. Are you getting? So whatever is happening right now is that from the top, take it from the top, let me go to the 1 hourly or 30-minute chart. Let me show you something now. If we are to trend this market and see what is happening, the market is bearish because according to this, we had a break of structure to the upside. This was the low. Then we had came for on that low. We're supposed to be a double top. I've done that video before, but we changed character to the downside. We broke this low that broke this high. So for us to break it, that has to tell you that we've done a change of character to the downside. So now the market is bearish. So we're coming back for a retest. Now use your Fibonacci retracement levels. We're coming back for a retest on any of 0.38 or 0.5. We got a perfect retracement at 0.5. So this market is extremely bearish right now. So if this is the case and we have, if we remove this Fibonacci and we'll have these two levels to become bullish again, are you getting it? Or to become bearish again, you don't trade this consolidation. You just wait for something to happen, like conservatively, if you don't want to get punished in the market. So but for now, me, I know how to trend what's it called, consolidations. That's why you see that I'm very good in the market. So whatever is happening right now, internally, this was a low, this was a high. So this was supposed to come and break to form on that lower low to continue going down, but instead it came and formed a double bottom on the 15-minute chart. So coming here is change of character to the upside. So you expect a minor retracement, and this guy is continue breaking structure to the upside. So for us to switch and say that in case you are in a short position already from the 0.5 Fibonacci retracement level, for us to shift down, let's break down again and change character to the downside here. Are you getting a change character to the downside here? Then come to retest a Fibonacci retracement level again. Are you getting it? Come to retest all this Fibonacci retracement level again. Then we know that you can enter more layers at 2016, and this market will take us to the next, it will take us to the next support level at the 1 hour time frame. So definitely we'll go back to the 1 hour. If that's gonna play out, then we can see that we'll bring our Fibonacci trend extension in and say that okay, this is our previous lower high to our new lower low to our previous lower high to take us to 1998, 0.618 retracement level on 1991. Are you getting 1991, 1992? This is what this market is bringing up right now. So remember, the trend is your friend. Currently, the trend on the 1 hour time frame is bearish. Look at your structure also. We are bearish. Are you getting it? So the trend is your friend. Don't try to trade against the trend. So I've trended it from the 15-minute chart. I'm on the 1 hour chart right now. And if you go to your 4-hourly chart, you will see that we'll have a trend line coming from the bottom. So if I use on that so that it will not be too dirty, you can see that we have a new we have a support trend line on the 4-hourly chart, and we'll have a resistance at 2045, 2050 area that will be trending from there. We'll have this support trend line from the bottom. So we will definitely come back to this support trend line. So if you know how to trend the market, you should know that this place is liquidity. Are you getting it? So I'm expecting just a shift to the upside. That's why I stay on the 4-hourly chart. If I was on the 4-hourly chart, I will not be seeing those noise happening on the 15 minutes because I know what the 4-hourly is doing already. So definitely we are supposed to come back to 2021, 2022, 2023, 2024 retracement levels area, then come to our support trend line, which is at $1990, $2,000 area, to take this liquidity before we might even say we want to go back up to these areas again to sell down. Are you getting? So if you're on the 4-hourly chart, you will not be seeing those noise that will be making you have emotions or run emotions. So as a most swing traders don't even go to their lower time frame. They just take a trade from maybe 2015 and use a 150 pip stop loss to 2030. Are you getting it? And just watch it play, like, put a risk to reward ratio of like let me see from here right now. Are you getting it? So you can put a risk to reward ratio of maybe 4.2, then put a 2030 stop loss, or even probably 2030 something. You still have a what's the risk to reward ratio? PNL 4.3 risk to reward ratio. So if you are risking this and taking this trade all the way down in case, because this is a major take profit level. So if we are reversing back to the downside, doing a head and shoulder, a left shoulder, a head, then form a right shoulder, break, form a right shoulder, then form this. This is how professional traders look at the market. It's scalpers that tends to look at the market with from the lower time frame because they want the cash small pips to plus and minus, up and down. So this is the way I'm looking at the trade right now, and I'm looking at us coming back to this trend line. So definitely I know that we'll definitely come back to this trend line. That's why I'm even still bearish on gold. Are you getting? So this is it. This is what we have here, and I'm just hoping that definitely this ascending triangle, which is a bullish continuation pattern, if you can wait and let all these things form internally, definitely you know that overall is either we're coming to this trend line, come back to this trend line, then come back to 2040 area, then come and break it, retest it, then come down to finish forming, or we're coming back to $2,000, $1996 area, come back to 2040 something, come back, then break with 3. That's Elliott wave 1, 2, 3, 4, 5. Continue this market to the upside to 2,100. So you should be vigilant at any time, any day, whatever you're doing. Don't get carried away. Are you getting it by what the noise happening on the lower time frames? And the lower time frames, don't try to predict what's going to happen in the lower time frame, except you go to your higher time frame. So this is what we have here right now. Currently, this is what we have here running right now. So let me upload for you to at least add to your analysis, and just trade this market the way it's supposed to be. So we have a 4.3 risk to reward ratio here. If it plays out as a swing trader, are you getting it? Or you go to your lower time frame to trend it out as a what's it called as a now look at the shorter what's it called trend line. You see that we're having here, we'll have a shorter lower time frame trend line. You can see here. So go to the 15 minutes. You can see that this market is trying to break. We've been acting on these what's it called this shorter maybe shorter trend line support and what's it called ascending triangle. So if this market as it stands right now, what is an ascending triangle? Is a bullish continuation pattern. If this market continues holding this support, it will take us to the upside, break it, and continue to the upside. So it's not about being on the higher time frame or trying to take a higher time frame. If we can delete that, we have to be on the lower time frame to see how the day is trending, because we cannot break above this 2021-2022 area. If we break above it, that means we'll have on that trade to the upside. Probably for those people day trading or scalping, if we break to the upside and hold it, come and retest, can take us back to 2040. Are you getting it? So you watch if you want to watch for fun, if you want to see what's happening for fun, trend the market on a day trade the market on the 15 minutes time frame, and you'll make money. Because gold, you can see that gold from 2016 it is right now to 2040 is about 240 pips. That's 240 pips. So you don't run emotion, just flow the market, whatever it brings to you. Don't try to say, oh, the market is bearish. You can actually be on the lower time frame and trend this market. You can trend this market on your lower time frames. Are you getting it? Scalp it out. 1 minute even though is working. So whatever is happening, just watch this video and don't try to over leverage or run emotions over trade. Just flow the market. Whatever it's doing, you have it in less than 15 minutes already. Are you getting it? So let me end it here and upload this video for you guys to watch. Thank you. Bye for now. So hold on, I'm trying to see something. You can see that this market is trying to reverse from here, because it might have come to this what's it called. Whenever you see this kind of price action, what do you see here? Is in 15 minutes candlestick pattern, but that is something like a hammer. Are you getting it? So but that's not decided yet. A hammer comes with a bullish candle, so you can't just decide, oh, let me just enter. It comes with a bullish candle. Are you getting it? When you see a bullish candle, okay, you can take a trade, put your risk to reward. That's about 404 risk to reward ratio again. Are you getting it? So if you're doing that all the time, you'll see that you still be in this business and you are risking $100 to make $400, no problem. Are you getting it? So this is the difference right now, because according to from the beginning of the chart, we need to break this and shift to the downside. You can see many things you can put in your trading, many ways you can analyze. As long as you break this, you're breaking this trend line right now. So you break the trend line, you break this trend line, you break this support, you break this the trend line from the bottom, retest it, and you come to your 1996. So it's as simple as that. Or you continue to the upside by breaking back to the upside, breaking this, continue this market to the upside. So that's why I use my 15 minutes chart. You see me come to the 15 minutes chart, I use it to trend this market. So this is the difference between what you saw on my gold chart here. Is it here? Okay, same thing. You saw that another way again I use in trend this market was the same thing you are seeing here right now. It's not the same thing. Same different scenarios, different perspectives. So I employ a lot of perspectives, and sometimes also I go to my I do a multi-time frame asset analysis. And as you can see on the what's it called, on the 1 hourly chart of Euro USD is supposed to come all the way to look at this is even very easy. Euro USD is one of the easiest. So we broke down from this ascending channel, which is a bullish continuation pattern, and we tested, and since then, so EURUSD is supposed to come back to this area, try and reverse back to this area to find resistance again, or this my full hourly chart, or what's it called, look at how I've been trending this market. Look at so this has been resistance. If you have taken those trade, so this is the next resistance I'm looking for. You see those red circles, and on the other hand, we broke down from this what's it called, liquidity trend line, and since we've broken those liquidity trend line we're yet to break it on gold, but we've broken it on the what's it called, on EURUSD already. So we've broken this support also on EURUSD already. So the next support we'll have is at the bottom, 730, 750 area. I get it. So look at, have you trended this? Have you seen this kind of market structure before? So definitely what we're trying to do is come back to these areas, or this support area, major support area that we broke. Then we trend another 200 pips to the downside. So you have to be, you have to have the golden eyes and have multi ways of looking at the market. I don't use indicators, I just flow with the market, and that's why I'm always right. It's not like I'm a genius or something. I have a lot of ways of analyzing this market. I get it. So if I can check USD like that, that means gold is supposed to go up. I get it. And Bitcoin is supposed to also go up. They are all dollar pairs. Are you getting it? They are pegged to the dollar. So that means what's it called? As you can see, we have a breaker structure to the downside, but this is a support that we did a fake out, and right now what are we trying to do? This is a breaker structure, so definitely we're coming back to probably Fibonacci retracement level to 28,500, then flush to 25,000. Are you getting it? So it's just, if you're ever confused in one particular asset, other asset like GBP, JPY, the rest of them can tell you whatever it wants to do. So you transfer it to your gold, as you can see, transfer it to your gold, and you are good to go. You're good to go. Let me end this here and upload on the Telegram group for everybody to watch. This is what I'm seeing. I'm trying to rest because I'm never supposed to be trading this week. Last week gave me everything I wanted for the month of May, so I'm just trying to see if I can meet up with one or two. So I'll just be watching. If I see any trade opportunity, money is money, I'll take it and put some risk to it, and have maybe a 1-to-4, 1-to-5 risk to reward ratio. This is a new week. Be careful and know how to analyze the market. Take care and buy for now. VisionX is coming. VisionX has one of the best ideas in the market right now. No matter how long it takes, it's not about the money, it's about your consistency. Don't look at the money, look at the consistency. And if you want to help yourself, are you getting it? Any risk you put into a trade, just take it that maybe you're risking $100 to make $400, or you're risking $1,000 to make $4,000, you're risking $10,000 to make $40,000. As long immediately you enter that trade, if you know you analyze very well, take it that you have lost that money already, so that when the loss comes, you should not affect your emotions. That's the advice I'll give to each and everyone for now. Take care and bye for now. Bye.